Yo, what's going on, everybody? Let me see if I'm live real quick. I'm gonna grab this link and then throw it on these Discord groups that I'm a part of. All right, well, we still have Sam's pretty face, so we're gonna roll with his face and let's do this. All right. My groups right there. Let's see. Hey, give me a thumbs up, everybody, if you're joining this for 2 days in a row. All right. Let's see what we got here. Throw that in there, and throw this one in here. I don't even want to go through my Telegram groups because there's too many, but I'm gonna stick with Discord for now. Alright, so I'll just leave this here, and we're going to start off with some bare bones price action reading and see what's happening in the charts. So hope y'all are doing well. Let's see who we have on the YouTube live session. Give me a shout out, give me a thumbs up if you're joining, guys, if you're part of the Cryptosomniac community or you're here for the first time. What's cracking, man? Monero Dinero. What's up? All right, we'll give it another minute till more people join, and then we'll get started, guys. So for those of you who are watching for the first time or you don't know me, Mark G, yeah, it's Sam's pick again. I know, man. I'm sorry. I don't know what to do. It's all good though. But, you know, hope you guys are doing well. How's the markets treating you? How's the weekend? How's life, everybody? Are you guys still trying to trade this market? Are you trying to be long-term investors? Are you trying to dollar cost average? I'd like to hear from you guys, you know, and let me know what exactly your strategy in this market, and maybe I can provide some input on that. Okay, let's see what people are saying here. What we got? How many people we got watching? Only 8, huh? Man, this market's drying out. Yeah, I used to have, you know, 50 to 100 people watching, but now we got like yesterday we had, I think, 22 or 28 at one point. Today I know it's a Saturday, so I don't expect that many people to be here, but we have about 8 to 10 people watching. So guys, we're on this 1 hour time frame, right? And we see Bitcoin kind of creating this sort of symmetrical triangle for the last few days. And you see that it broke out, right? So I was telling my group this morning that if you're looking for trading this pattern right here, your breakout could be one of two places, okay? It could be past this level right here, so you know that it's a confirmed breakout because you will have created not only a higher low but also a higher high as per this swing. Or you could buy above this level, which is 3670, which is where, you know, a significant amount of resistance was, and we had some of these. If you go to this chart right here, I pointed out that around 3670 is where this line comes from, okay, from way back here in 2017 September, right? So being under this line, if we're going to close under it on the weekly chart, it's definitely not going to be a good sign, okay? Now the fact that we are right just $20 or $30 above that line, and if we close above it, it could potentially be a positive sign. Okay, so let's see when this day or this weekly candle closes. So today is the 14th. Next one opens on the 21st. Okay, so that's another 2 more days, right? So in 2 more days, if we close this candle above this level, this is a somewhat bullish scenario. Okay, and I really mean somewhat as in like really somewhat. Okay, there's a lot of chop zone in this area right here that we need to get through. And this is why you see this big wick being facing down, right? Like that. It's because there's a lot of sellers from this whole region right here between $3,700 and $3,800, even maybe a bit of $3,900 that are looking to sell because they were, you know, under the water for the last maybe week or two. Okay. Now they're going to be looking to sell. However, if the bulls are capable of pushing the prices up, well, your next target is probably going to be this, you know, this descending trend line. Okay. As I've always told people in my group, that you want to try to buy supports and you want to try to sell resistances. Okay. The reason being, right? Probabilities are always on your side if you're buying the support and you're selling the resistance, right? So for example, if we know that this is a decent demand zone right here, right? What you do is you can say that, okay, if Bitcoin is going to retrace, I would expect it to come down to this level, right? Now, I'm not saying you should catch a falling knife when price is literally just dumping hard like that. But if you see price kind of move into this level and slowly creep on up, well, you can buy in that level and you place your stops maybe 1 to 2 percentage points below the previous wicks. So that would be, you know, if current prices for this wick are 34.81, you place them like right down here around 34.30 or so. Okay. So that's how you would play this entire move if you were to take this long position, right? So if you took this long position from down here, you're doing pretty well because you had one opportunity to sell right here and now you're having another opportunity. Okay. And even in this area right here, you can see that we spent a significant amount of time in this, you know, potential demand zone, I guess resistance turned support now, but we moved up and out of it, right? But now we need to see if we're going to, you know, come back to this level and move away from it sharply, or even not only needing to come back, but rather come back here and then move away. So the way the strength of the bulls is gauged in patterns like this is not needing to come down to support levels. Okay, guys, there's no necessity that, you know, you need to come close to that support level. It's okay if prices come down even to this level right here and then just move away. Okay, that just says that the strength of the bulls is that they won't even let price, you know, come down to strong support levels like, you know, this one down here, but rather they just shift prices to the upside before prices ever even reach down close to it. Okay, so that's one way to gauge that. All right, so let's see what's happening on the daily chart. So Mark G says, mainly accumulating, looking to dump my Zilliqa bag before mainnet. Yeah, when is that mainnet launch? Let me know. I mean, I like Zilliqa because you know, there's a lot of smart money and hedge funds that I know, or rather investment funds that are invested in it. And as far as I know, they haven't dumped their bags, right? And I like to kind of follow the smart money, right? Because I don't think I'm the smartest person in the world, but I know that if I'm following the smartest people in the world and those who have been in this business much longer, the chances are that, you know, I can ride off their coattails, right? And this is essentially what you need to do in markets that are tradable, guys. You need to follow the smart money, shadow exactly anything and everything that they do. And I promise you, you'll make, you know, more money than you've ever made. And this is why I always tell you guys that, you know, make sure that you follow the smart money, and you know that, okay, where exactly is smart money going? How do they operate? You know, what is their position sizing when they buy specific assets, whether it's Bitcoin or, you know, the equity markets or whatever. And what kind of confirmations do they look for as traders? I mean, do they completely just let the market go when it starts breaking 200 moving average? How exactly do they trade? What kind of returns do they look for on their trade percentages? How many percentage points do they look for in their trade? You know, how soon or how long do they hold on to a trade, and when do they let go when it's in a losing position? These are all questions that you need to learn about. And I actually have a massive trove of information in my education channel for that kind of stuff, okay? All these questions are answered all in here. I put on, you know, educational videos for my community. I have divergence knowledge tests, ICT videos, all kinds of stuff is in here, guys. And this is part of our Advantage program. So if you want to join, come join our community and you'll learn more than ever. And, you know, again, as I've stated before, I'm not like your typical, you know, give you a signal and that kind of group. I'm here to really teach you guys. And I really want you guys to learn, because at the end of the day, I mean, chances are that, you know, you're going to be in a market like this well beyond crypto, or you might be interested in becoming a trader on the side, or you want to have, you know, some supplemental income. You never know how you're going to utilize this skill set going forward. And this is why I tell you guys that learn to be a proper trader. Wait for confirmations. Wait for, you know, what the smart traders are looking to do. And one thing that I've noticed is, you know, and sometimes I make this mistake too, right? For example, you know, we were essentially waiting for this inverse head and shoulders kind of pattern like this, right? But I saw a majority of people opening huge positions in this area right here when this descending neckline right here hasn't even been broken, right? Now I had a position too in this, right? I had anticipation, but I knew that I would position size when this broke out, not when prices went deeper, okay? And I told you guys that, you know, this is how we need to wait for confirmations of a break to the upside, okay? We need to make sure that we have proper confirmations of patterns, right? Especially like this one right here that I showed you earlier. When we had this symmetrical triangle being created, you don't want to buy a position anywhere in this triangle, okay? You want to buy the position when it's broken out of it. A clean breakout is what you need to be looking forward to, okay? And so when we know that you've broken out past, you know, 3650 or 3670, yeah, then you can take a trade, okay? Because remember this entire move right here, guys, it happened between like a 5-minute time span. As you can see, this is literally 5 minutes right here. And probably even less than that if I look at this on a smaller time frame. So there's no way that you're going to catch these moves, you know, on their way up. But you can wait for, you know, confirmations and even retraces like this, right? So I mentioned to my community that, you know, if we're looking for a retrace of something like this, I'm going to ignore that big wick. But if we're looking for a retrace like this, right, you could wait for, you know, the 382 or the 50 or the 618 Fibonacci levels to be hit and then take the trade to the upside. You also have a horizontal level, right, that was necessary to break through, which is 3670, and you can wait at this specific level, set your buy orders, and then take the trade up if you believe that this is a longable trade. Or if you think that this entire thing is a false move, then short the shit out of it, right? I mean, why not just short this entire move and profit on the way down as prices are falling, right? So there's all kinds of ways to make money in a market, but there's all kinds of wrong ways to lose money too, okay? So that's the point of this, you know, session that I'm trying to put on today is, you know, what are proper risk mitigation strategies? What are proper risk and reward trades that you need to get into or not get into, okay? So one thing I mentioned to my community is, you know, the 128 moving average, which is these gold circles right here, is something that's been used quite a bit in Bitcoin, especially in the equity markets, right? And as you can see from early 2017, we've used, you know, this 128 moving average as support multiple times on the way up. And then on the way down, we've used it multiple times as resistance, okay? So now that prices are around, you know, the $3,700 level, and the current 128 moving average is right around 5,000, I expect at some point that either this moving average is going to keep coming down like this, and price is going to kind of touch it and then reverse again. Or at some point, we're going to find a potential breakout out of this 128 moving average, and then we'll start our next, potential end of the bear market or maybe a new bull run. Either way, we're pretty far away from either of those scenarios. I have kind of been of the opinion that, if we are to be in an accumulation phase, the only way to know that, guys, is if prices are moving in this sideways directional range, which is, anywhere between 3,000 and 4,000 for maybe like at least, 8 to 12 months, right? And the reason I say that is because, if you look back in the 2015, 2016 bear market, right, way back here, you saw that, prices spent almost, 9 months in this sideways range right here. So prices moved between 163 and 350 or $400 for almost 10 months, okay? So almost 10 to 10 and a half months. Now this entire move right here, this is all accumulation by my standards, right? Why? Because price is moving sideways, it's in a tight range. We are not creating lower lows. We are creating higher lows, but we're also creating very small higher highs. Okay, and you can see that on the way candles close on the weekly charts, right? Kind of like this one. You can see this candle closed slightly above some of these wicks right here, but this only happened literally like, if this candle closed way back here in March, this one closed way back here in July, right? So almost a good 3-month gap right there. So this is how you gauge accumulation, right? So my opinion is that, we may see an accumulation period in this region right here, right? But we're not going to know if it's accumulation until we've spent a significant amount of time. And I promise you guys, you're going to get plenty of time to have an opportunity to buy, quote unquote, the bottom, okay? But the point is to never want to buy the bottom, okay? You want to make sure that you have a confirmed, accumulation period, or you have a confirmed uptrend. So say, you even bought like right here, right? Once prices went from the low of 163 in January 2015 to, say this area right here, $450, right? Which was a decent size resistance level for almost, 4 or 5 months right here, right? When prices hit this area right here, you know very well that, there's a big breakout coming soon, and you can buy into this range right here. And from 450 to 20,000, that's a pretty sizable gain, guys. That's a 50x gain right there. So I mean, you should not try to buy, a falling knife, right? And that's not something that you ever want to do. So it's okay if you want to wait for the bottoming of this market, because again, you'll have plenty of time. And don't ever believe the people that, tell you that, hey, you need to buy right now or whatever. Of course, you could dollar cost average, and you could start, buying $100 here or $500, every few weeks or every few months. And there's nothing wrong with that. But don't go all in with your stack right now. And especially do not use your, savings or your retirement money or necessary income, okay? JF Airplane, can you cover a bit more of the breakout thing? Many times it breaks in 1 minute and then goes up and again, and we cannot enter. Okay, so JF Airplane, all right, perfect example, right? That's a great question, by the way. So this is the large pattern that played out of asymmetrical triangle. As you can see, it went from January 14th, right, all the way to January 19th, right? Literally just like 8 or 9 hours ago, this pattern broke out. Okay, so the way you play this pattern, in my opinion, is not buy into this pattern, but rather acknowledge that this is happening. A tightening of prices is happening. The symmetrical triangle is being created. And if there is a break to either side, more than likely you're not going to catch it, okay? Because, I mean, the space is so run by algos and bots and, people who manipulate the market that they push it within minutes. And before you could blink, this market has literally taken off, as you can see, from way down here at 36.25 all the way to a high of 37.60. So by the time you become aware of the prices that are rocketing, you're buying up here, right? And then price retrace, and then price retraces, and then you're thinking that, oh shit, this is gonna fall. And then you sell somewhere down here. But what I propose is let this move, right, play up or down, you know, whichever way it's gonna go, let it play out, okay? But you wait for the retrace, okay? Because remember that prices will always retrace. As you can see, a clear example of that is this big wick, you know, big candle right here, right? You could see it went from a low of 36.86 to a high of, a low of 35.38 to a high of 36.86. So about $150 move right here. But look at the retrace, right? The retrace almost took out the entire move right here, right? So you need to make sure that you know how to use Fibonacci levels. So if you're part of our community, I teach you guys how to use Fib levels. Starting to work on an educational course that I could release to my Advantage program members, as well as, you know, the public. But you got to understand how to use these Fibonacci levels. So you can even, I like to use it from like the most bottom candle, like this one before the big up move. So you can say it's something like this, right? So bottom of this is 35.89, top of this is 37.26, and then we're gonna wait for the retrace. And one of the proper retraces is right around this 36.70 area, which is the 382 Fibonacci level. Another one is, you know, 3657 and 3641. So anything in this area right here, the probabilities are on your side that, you know, if prices retrace like this, they'll bounce back, you know, at least a little bit, right? So this is kind of how you utilize Fibonacci retraces. But to answer your question, JF Airplane, is that I would not buy this pattern at all. I don't buy, you know, within this pattern. You can, but I'm saying that the best traders in the world, right, guys, they trade breakouts and they trade the middle, okay? Because they know that on the breakouts, they're not risking their capital, nor are they taking, you know, gambling-like mistakes, okay? They have no idea where the markets are going. Their job is to get into a confirmed breakout, buy the retrace, and not chase the bottoms or the tops. Their job is to get in the middle and sell the middle. That's it, okay? You know, even Peter Brandt always says, the guy on Twitter that you guys like, you know, he says, give me the middle, give me the easy money, you know, give me the range where I can literally buy a retrace of this move, sell at the top of this resistance right here, and that's it. So if we were to mark that up, right, so say you bought a retrace at 36.70, and, you know, you knew that prices weren't going to get that high, you think that this was like a sort of a false breakout style move, you know, and you bought this and you sold off at this resistance level right here. Well, that's a nice 1.5% move right there, guys. And that's it. You get in, get out, you know, and you're done for the day. A 1.5% gain on, say, if you're playing with $10,000, that's $150 right there. You know, that's a nice, you know, couple of meals for you and the family for at least a day or two. That's it, guys. That's how you trade this market. It doesn't have to be that hard. You don't need to make technicals and being able to anticipate what the market is doing, because at the end of the day, no one fucking knows where the market is going. I don't know, you don't know, and just no one knows. The only people who know are the ones who are moving the market, and they are for sure not going to tell you where they're moving the market to. So why are you concerned? You know, just play the game. You know, enjoy yourself in the market. Don't stress too much. Buy the breakouts, sell the resistance, buy the support, get in, get out, have fun, right? That's all you got to do. Are you with me, everybody? Give me a thumbs up, or, you know, give me a hi, hello if you're new here or you're listening, guys. Wanna feel some love from everyone in the YouTube channel watching right now. But yeah, I really appreciate you guys joining me on this Saturday. I know you have better things to do. I was actually just cooking up some jerk chicken for myself, so I was like, you know what? I think I'll go live. I wanna see how my people are doing. So I figured I'd give a nice hello to you guys. All right, so a couple other things that I went through yesterday, I'll go through today. So let's see what we got over here. Okay, let's see. All right, so the inverse head and shoulders pattern, like I said, it's essentially been invalidated. Now a break past that, yes, I guess you could call it as a inverse head and shoulders. For the most part, I mean, I've kind of just let it go. But if prices do break out, again, you know, as I said before, right, wait for a breakout. And so you want to wait for a breakout somewhere above maybe 4,000, 4,100 at the very least, to ensure that we are essentially breaking that descending trend line. Okay, and once you break out past that, I mean, you could take that trade potentially even to this 128 moving average, right, which is right around the $5,000 levels. Okay. So one other thing that I talked about yesterday was order blocks. And if you guys are not aware of order blocks or how they work, I've explained it in detail on TradingView, but just to give you a brief understanding, they're essentially a way where buyers are holding down the price to accumulate more, have maybe a profit check, meaning that they've, you know, rode this thing from here all the way till here, and they're selling off, but they need, you know, other buyers or, you know, to buy what they're selling, and they're done with this train, okay? Or there are buyers wanting to accumulate more, so they'll hold down the price, drive it down, and then push it back up, okay? So either way, you can look at these as, you know, the keywords of order blocks, okay? So the current order block that we're in right now is between 4,700 and 2,900. And as I've stated before, that the 50% Fibonacci of these order blocks have been extremely important, because as you can see right here, right, the order block that we were in way back here, essentially through the entire of, you know, 2018, between 7,900 and 5,400. Once we came down under this area, which is 6,650, you know, so like right around this range right here in September and October, I mean, we spend most of our time under it, okay? So the more time you spend under the 50% Fibonacci level of that OB, the higher the chances and the likelihood of it breaking down, okay? So if I see that prices are essentially creating, you know, not higher highs, but they're bleeding down towards, you know, this low that we had in December, I will be fully convinced that this thing is going to break down pretty hard, okay? But for now, I don't have a confirmation of anything. I mean, all I really see is just a sideways movement. So if I see this long enough where prices are essentially moving in this tight range, kind of like, you know, up and down, up and down, up and down, I will assume that this is accumulation. Now, obviously, you can make the argument that, you know, well, why wasn't this accumulation? Well, it wasn't accumulation because we had a high of 20,000, right? And every time, guys, we bounce into this level, we had sort of this, like, you know, bouncy ball style effect where the bounces got lower and lower and lower, and then eventually it just moved sideways, right? This is not how bottoms are created, okay? And this is not how accumulation happens either, okay? If we were to spend, say, another 6 to 12 months in this area, in this 6,000 area, then I would assume that, you know what, maybe this is accumulation. But the fact that we didn't, and we were so pressured into this area, and the fact that we had already broken the lower lows rule, which was, you know, way back here in February, we had a low of 6,000, then we went to 5,400 or something on most exchanges. That already violates the rule of accumulation, which is that you don't go and create lower lows, okay? I mean, you may have one area where you kind of, you know, have a spring test like that and then rebound hard, but that didn't even happen. You can see that prices actually got even weaker and weaker. All we did was create like that huge descending triangle that we spoke about, right? And descending triangles have a higher probability of breaking to the downside. They're bearish continuation patterns, okay? All right, let's see what else we got. So this was another chart that I mocked up, and I spoke about this again yesterday. I mentioned how every time Bitcoin has bounced from its high to the low, so you know, say 20,000 to 6,000, it's only been able to rebound at the highest, which is 618 Fibonacci retrace, right? This is, you know, on its way up. So you can see that, you know, from here it bounced here, retraced here. Then it went, you know, to the low right here, retraced here. And then it went all the way down here, retraced here. And again, you obviously, you know, see this entire move as a big descending triangle, but also when you put the fibs out, you can see that Bitcoin has not moved past the retrace of the 618 Fibonacci level in a long, long time. So if we write up a fib from this big dump off, right, the one we had in November, from this middle area right here, we went all the way to 3,100, and you could see that we didn't even come close to the 382 retrace. This basically tells me that we are significantly weak in this area. Okay, it just shows that you know, we are not even strong enough to get back to the 382 Fibonacci level, and that's why this asset to me looks far weaker. Now, unless, you know, I'm being tricked into the fact that, okay, well, we're not supposed to get to the 382, we're supposed to kind of move sideways into this area almost for like the next, you know, 10, 12, 15 months, and that could be your accumulation. But I don't need to worry about that, right? Because for now, it looks weak. But who knows, if this price spends a decent amount of time here, then I'll be convinced that, okay, you know what, maybe it's time for me to, you know, buy into this right now. Okay? It's a good way to look at that. Who all is here? What's up, 4-Leaf Crypto? What's going on, man? Hello all from down under. What's up, man? What do you think would be a good price to buy into Ethereum? So Ethereum is, you know, I still like Ethereum for all the hate that people give it, guys. I honestly think that it still is number 2 to Bitcoin. I mean, it's a far number 2, but I think it actually has really unique use cases, right? I really don't think XRP is that great. I'm not trying to hate on it. I'm just saying that I think Ethereum has a far better use case in terms of smart contracts, in terms of deploying ICOs on their platform than XRP does. XRP definitely has, you know, a lot of connections and partnerships, and I can't hate on that. But, you know, Ethereum is led by that, you know, genius Vitalik Buterin, and that guy is truly a remarkable person. You know, the way he looks at the world, it's something to believe in, right? So I can't hate on that. And so I like to, when I kind of gauge the strength of a project, I not only look at its use case, but I also look at, you know, the founder and the leading teams and what exactly is their vision and how willing are they and how much are they contributing to their projects, right? How diligently are they working towards what they want to make? And clearly, in my opinion, Vitalik is committed, right? He's a committed fella, and he really wants to make something great out of this space. So I would put my money on Ethereum, as well as Bitcoin and some other projects. But I would probably say that, you know, Ethereum is going to come back down if Bitcoin is going to go down at least to the previous lows, which is 80 bucks, or maybe even lower all the way down to this area right here, which is about $40, okay? And I had stated this a little while back to my community. Unfortunately, my target was 75. As you can see, we were about, you know, $6 short of it. So I did not hit my target on point, but you could see that, you know, when it comes to targets like that, when you do the proper technical analysis, it's not that hard, right? So 81 all the way down to 40 bucks is probably a big accumulation area for Ethereum, in my opinion. So whenever that happens, you know, I'm definitely going in, you know, with with some of my stack to buy. Again, none of this is investment advice. You guys do whatever you want. I'm just telling you, you know, what I'm going to be doing. Okay. I've noticed an anomaly over the last 3 to 4 years. BTC dumps around Super Bowl Sunday. Shh. I have buy orders in the event it happens again. No way. That's kind of cool. I don't really know when Super Bowl Sunday is coming up. Because I thought they were in the playoffs, right? Isn't it the playoffs now? But anyway, I just think that's interesting though. Okay, so another thing that I wanted to show you guys is this website called Coinmetrics. Very amazing website, and I think it was developed by Nick Carter, I want to say. Really fantastic individual. He seems really dedicated to the space, and I'm really glad he put out something like this. So one, you know, sort of indicator that I look at is the Kolichkin's NVT, which is a little bit different than the traditional network value to transaction ratio, which is like this one right here. So what the Kolichkin NVT does is it maps a 90-day moving average to this NVT right here. Okay, so it gives you a more, you know, cleaner look and less noise to whatever asset you're looking at. And as you can see, you know, so far it looks like the Kolichkin NVT is somewhere in the middle ground of 20 to 24 points. Now, it's said that, you know, in the NVT, the Kolichkin NVT, when things get, you know, lower than 5 or closer to 0, you have, you know, what you would call a oversold condition, quote unquote, right? And so as you can see, the end of the, you know, the bear market in 2015 and 16, and the start of the bull market started when the Kolichkin NVT was also at the bottom. Okay, so this is one way for you to gauge that, okay, well, are we at the bottom? And if so, I mean, is this a good time to buy? So this is an area, this is one of the indicators that you can start looking into, right? And if you want to read more about it, all the stuff is right here. Again, very interesting website, coinmetrics.io, give it a shot, okay? And they have a ton of other stuff. I mean, you know, what you can do is, let's see. So you can do price or index. Okay, so let's check this out, right? So that's the DXY to, actually, no, you can do correlations. Sorry, that's what I was trying to show you guys. So you can do correlations, okay? So let's see right here. So BTC to LTC. Okay, so remember guys, the closer you are to 1.0, the higher the correlation, meaning the almost a synonymous movement that you have with these two assets, which is BTC and LTC, right? So I know there's been a lot of people who are asking like, you know, why is it that XRP has been breaking out? And I keep telling them that, hey, it's not breaking out. Like it's not that, you know, it's not uncorrelated, right? Or rather, it's not negatively correlated. As you can see right here, almost through, you know, 2017, 2018, it's been pretty positively correlated to Bitcoin. Only recently, over the last few weeks, it has had up and down movements where you feel like, oh, okay, well, you know, I think XRP is negatively correlated, because you could see Bitcoin moving sideways, but then XRP has a negative correlation, meaning it moves in the opposite direction. Okay, so a negative correlation or a slightly less correlation would imply that the asset moves in the opposite direction. But as you can see, we're still in the bounds of, you know, 0.7 and 0.9, which is a pretty strong positive correlation. Now, if this, you know, blue marker right here, guys, here, let me turn this off first. If this blue marker was way down here to, you know, 0.1, 0, or even the negatives, then I'd say, okay, you know what? Clearly these two assets move in the opposite direction. So when one goes up, the other goes down, right? Another thing that people talk about is the correlation between the US dollar, gold, or the S&P. So let's take a look at that, right? So here's the correlation between the DXY, which is the US dollar index, and Bitcoin. So for the most part, you can see that we're almost uncorrelated or somewhat negatively correlated with the US dollar. Okay, so when the dollar goes up, Bitcoin goes down, or when Bitcoin goes up, the dollar goes down. Now, I don't think that there's any impact of movement of money from one asset to the other. It just so happens to be that there's clearly, somewhat of a shift happening in the movement of the assets. And for the most part over the last few years, it's essentially uncorrelated. Okay. Now let's check the gold movement to Bitcoin. Okay, so gold also barely correlated. This is not correlated at all, right? When you have a movement between 0.15 and negative 0.1, this is not correlated or uncorrelated. This does not mean it's positively correlated or negatively, okay? Remember, the negative correlation must be 0.7 or 0.8 or higher, and the positive correlation must be the same thing on the other side, which is 0.7, 0.8 or higher on the other side, right? Okay. One other thing that was brought to my attention when I was reading was this thing called the Mayer multiple, and I think it was made by this guy, by this gentleman named Trace Mayer. So the Mayer multiple is pretty simple, okay? All it does is it takes the current price, right? So if we're at 37.04 right now, and it divides it by the 200-day moving average, okay? And the current 200-day moving average as per January 19th, which is today, is at 5782, okay? So if we did that calculation, right, that should give us 0.65, which is that right there. So 3738 divided by 5782, okay? As you can see, 0.646, so 0.65. So the reason this guy developed this is because he's done some back testing in his data, which is, I think it's phenomenal. I'm gonna have to look at this on my own. He's shown them that, in the history of Bitcoin, right, we've always had an average of 1.47 Mayer multiple, right? The average Mayer multiple is 1.47 for the history of Bitcoin. So as you can see, we're currently at 0.65. So you could make the argument that we are, quote unquote, undervalued as per the Mayer multiple, meaning that current price divided by 200 moving average, we are far under that, okay? Now when price reaches back towards that 1.0, 1.47 level, then you could say that, okay, now we're coming back to what its quote unquote, intrinsic value price should be. But once it's overextended to the upside, right, and you see in, let's see, over here it says a price less than 16,461 would mean a Mayer multiple below 2.4x on February 5th, 2018, right? So if you're looking at the average history of Bitcoin as 1.47, and then the Mayer multiple at that particular time was 2.4, you know that price is overvalued. Okay, so these are different ways where you can start utilizing different mathematical formulas and indicators, correlations to identify and do your own research. Right? I don't want you guys to be just technical, quote unquote, trying to be wizards or traders in a market, looking at charts 24/7. There's many more, points and areas of research that you can dive into, and you can make your own decision, your own informed decision to buy or sell something. Okay, and the Mayer multiple and the correlations are just a few. Okay, all right. Four-leaf crypto. If you had to pick a coin that you feel is undervalued relative to other coins that are still speculative / overvalued, what would it be? I would, again, I don't like to throw out coins that I'm invested in, so I'll let you guys know first of all as a disclaimer what I'm invested in, and I'll tell you why I'm invested in it, and then you can decide whether it's under or overvalued. Okay. So first coin that I spoke about a little while back was Zen. Okay, now Zen we've actually even had on the Cryptosomniac YouTube channel, and Jason did a fantastic job interviewing them, and he talked about how so let's take a look at Zen, right? So if we look at, you know, Zen, I mean, it's definitely been getting destroyed with the rest of the market, but they actually have, you know, a fantastic product that they're working on, along with the fact that their community, even in a bear market, is actually building, guys. I mean, they have not stopped. You know, they do not want to be held down by, you know, a bear market, okay? And that's something that I admire about Zen, right? They're doing their job and putting out content and doing marketing and all kinds of research for their project. And also, another interesting thing is that Grayscale, the big investment fund, is actually invested in it, okay? So here, let me pull it up and see investment products, single assets. Where is it? Wait a second. Oh, right there, Horizon. Yeah, I forgot it's not just called Zen, it's called Horizon. So here you go, right? When a big fund like this puts their money and their weight behind an asset, and they have, as you can see, assets under management, $1.8 million. Obviously, these guys bought this asset when it was fairly high, September 6, 2000, or August 6, 2018. Now, if we look back when this was like way back here, right? So they bought it almost at a premium. So let's see how high of a price that is, okay? Actually, let's do this. Zen US dollar, right? So they bought in August. So from current prices, so we're right here. So where is August? August is like right here. Okay. Oh, whoops. I need to be going down. August is right here, and current price is right here. So they're down almost 80% on their investment already. But clearly that has not fazed them, right? They clearly believe in this project. And the thing about big firms like this, guys, that you want to pay attention to is you want to pay attention to the way they invest and how long of a time horizon that they look into these investments. So when they're buying something, right, they're not looking to offload their investment in like a couple of weeks or a couple of months. They're looking far down the line for, you know, 1 year, 2 years, 5 years, or 10 years sometimes. And they're looking for a big multiple on their return. They're not just looking for like a 50% gain or whatever. They're looking for, you know, the 5x or the 10xers or whatever. And that's kind of why I put my, you know, chips on Zen, kind of like these guys have already. Another project that I have sort of loved is Nebulous. This project right here has been one of my favorites, and even though I'm sitting at a loss and I still have a decent amount of Nebulous, I will more than likely be buying more. Why? Because the founder of Nebulous, two of them were actually the co-founders of Neo, if you guys remember Neo, right? Previously known as Ant Shares. And they're actually trying to create a, what's it called? A Google search engine, if you will, for the blockchain space. Now, what they envision is that they want to talk about how, you know, sidechain communication is possible. They want to be able to search the blockchain for dApps and apps and smart contracts, and that's their vision, right? And these guys update like every few days. You can see, you know, updates 1 day ago, 2 days ago, 3 days ago, and they're constantly putting out content. They have not stopped, unlike a majority of the groups out there, okay? And so that's why, you know, one of my goals is to acquire a decent amount of Nebulous if I can, okay? So another one is XLM, and again, XLM is also a big part of the Grayscale Investment Trust, and also they have smart treasury management, meaning that they have not pissed away their money in a bear market. They're still chugging along strongly, still having marketing outreaches, still doing a lot of project building and paying their developers properly, and they have not had layoffs like a majority of the projects, okay? So, you know, one thing I've spoken about often is that, you know, this space needs to go through a capitulation phase where all these garbage projects are just brought down to their knees, right? And when the space is rid of them, there will be, you know, no kind of things stuck to the rocket ship of Bitcoin when it's starting to take off, right? Because if you have 2,000 different projects where people are buying Bitcoin to, you know, put into those projects, Bitcoin is not going to gain that much value, right? But when you have people kind of buying Bitcoin and holding it, or diversifying only some of it into smart projects like XLM and Zen and Nebulous, you can then make the argument that, okay, you know what, the rest of the space is pretty much dead. Capitulation has happened. There's been a significant amount of selling that's happened. And, you know, Bitcoin is at lower prices than, you know, people have ever thought of. So that's kind of how I envision, you know, capitulation to happen. And once that happens, wherever that may be, I sort of envision a, you know, nice end to the bear market, an accumulation period, and then a potential start to the bull market in mid to late 2020. Okay. That's pretty much all I have, guys. Also, please do check out this slide deck by Delphi Digital. They put together an amazing presentation with amazing data, guys, and they've gathered a massive amount of information to give, you know, the average investor, a retail investor, or even institutions, or those even on the outside of the crypto market, looking into the crypto market from, you know, a snow globe kind of view, right? They think that things seem rosy, but whatever. But this gives a decent example of where the crypto space is, where it's going, and, you know, where exactly capitulation or where prices could head to. Okay. All right. I don't know, you know, that much about Nano. I do keep hearing that it is highly undervalued, so I'll take your word for it. But again, not my advice. But that's pretty much it, guys. That's all I have for today. Please come join our channel, cryptosomniac.com. Go check it out. We have all these channels right here. I put on, you know, daily Bitcoin analysis, video analysis for, you know, my members every single day. We have trade calls in here. We have ICO chats. We have stock market chats, Forex chats if you're interested in learning. And obviously down here we have the educational channels, news, etc. Okay? All right, guys. Y'all take care. Have a wonderful Saturday and a wonderful weekend, and I'll talk to you soon.